welcome to the C Trust Financial YouTube channel. You're probably obviously coming here because we probably sent you a link to see why you should refinance today, and I'm glad that you're here with me. So go ahead and relax, and I'll try to add some information to you. I hope you enjoyed that little piece in the beginning. Just try to make it a little more entertaining, because most people, when they're purchasing a home, they're usually pretty happy, right, when you first bought it. And then what happens is unfortunately happens usually pretty quick for people in the first couple of years, sometimes 3 years, sometimes even in the first year, where it's like, so many expenses in home ownership, that it catches them off guard, and they end up charging a whole bunch of things on their credit card, and just life happens, right? So I'm here to try to provide some relief and some information out there, but I have to at least first say, a couple of disclaimers out there so that everybody understands that it's just like, look, I'm not in violation of TRID. This is all for informational purposes. Required to put the corresponding APR rates or what somebody qualified for, and a whole bunch of legal disclaimers that come up really fast on a video. It's not kind of my style for that. I like to just be right up front. This is just for informational purposes, but it's close as far as the numbers. Not everybody's going to qualify for this either. You just have to give us a call. The number will be on the screen, towards the end of the video, and you can obviously contact us via the website too. So anyway, I'm just putting information out there because I hear so much misinformation of what people do, and I love all the people that want to sit around and say that, as far as refinancing, and why you shouldn't, and none of these people either own a house or they're not involved in the market at all. All they do is just look at, flat out, wrong information out there, So let's get right to it. Just like I put in the video there, just trying to show you that it's like, whether you have a large house, you got the mansion type, or you just have a simple house, whatever that you bought and you own, it's like, if you go and you buy the house, you have to understand this too, that the average, 30-year fixed mortgage out there, on average, only lasts 7.2 years. There's all kinds of reasons why people sell a house, refinance a house, get themselves in problems making decisions. But a lot of people, it's like they either move, they have to go somewhere, job-related things, family, health. There's all kinds of reasons, not just financial, for reasons of why somebody might not carry out the term. Most of the time, I haven't really seen too many people carry and pay off a loan for 30 years. It's out there, and it's like people want steady payments is what they want. And it's usually refinanced or it's sold. So that being said, if you're going to stay in your house and you don't have any debt, and you got one of these low interest rates that are in the 3% range or something like that you have, hey, thumbs up, but no one's going to, Fed funds rates like sitting at 5.33 this past week. So, it's you're not going to find too many people are going to be out there. They're going to be dropping you some 3 or 4% money out there again. I don't know whether that's going to happen again or not, but the bottom line is that, credit cards, let's just talk about those. Those are average, just nationally, anywhere from 25 to 30% to 35%, interest. I got one in the mail and told me it's like they're raised at 5%. I don't have a balance, but I was just like, wow, that's some interest rates. So when you go look at what the, average 30-year fixed mortgage, market is, and you can easily quickly find that online. I'm not going to put it out there because, again, it's one of those things where it's like, if you're going to throw out numbers, then you're supposed to have to put out the corresponding APR. And because I don't know what your closing costs are, it's kind of hard to do that, right? But I just want to put some information out there so that you have a better feeling for the three main reasons why you're sitting here watching this video, why I sent you the link to watch it, and why you should refinance today, even with some higher interest rates. So let's get right to it with the number one reason is debt. If you got yourself into debt it doesn't matter why. I'm not your father. I'm not the person that's out there, to tell you what you should or shouldn't do or what you didn't spend your money on. But if you got yourself into a debt situation, regardless of how it happened, the bottom line is that, we need to fix it because you're probably not being able to breathe. When minimum credit card, payments are about 3% of the outstanding balance. So I'm going to use a live type of information. I do these types of loans, regularly, and I come into seeing, people's credit reports and what they owe. And, this is a situation that is common out there, that someone got themselves into $40,000 or $50,000 in credit card debt. If you don't have that much, well, good for you. You have $10,000, whatever that you have on credit cards, right? At their very high interest rates and the minimum payments that you're going to be paying out there are so high relative to what you could do if you move that money over to your house. And I understand if you got one of those first mortgages, like I said before, 2, 3, 4, 5%, one of these things that was really, really low, you can keep that out there. Then you should possibly, like right now, the number one loan in America right now is a HELOC. And it stands for a home equity line of credit. It's a second mortgage. There's lots of different reasons, why that might be, something that you might want to look at. But even that money, sitting at somewhere between 8 and 10, out there, depending upon what somebody's qualifying for, that money is still cheaper than what credit card interest rate is, right? So I'm not a proponent on telling people to spend the money, but if you've already got that debt, right? It's like, let's do something about it. And let's try to put it into the house. No one's ever going to take over your credit card payments or any other kind of payment. So it's like, it's one of those things where you can usually roll it into the house, and maybe someday, and we're getting ready to come into some situations where maybe values are tapped out for a while. So you want to be careful with what you're doing and who you're listening to and what advice you're listening to. But credit cards, the interest rates are so high that you just don't want to be, stuck with that. So that's one major reason why you should refinance, because it's going to always be cheaper, money on a first or second mortgage on your house than it's going to be with credit cards. The second reason is if you have, cars, boats, RVs, those are typically run at like $22 $1,000. What do I mean by that? For about every $1,000 that you borrow. So it's just that little disclaimer that comes up really quick at the bottom of a car ad, right? It kind of shows you there those, factory direct financings and special programs that they have. That's usually what those are, and they're in that range. I don't know exactly what they'd be for your particular situation, but it's shorter periods of time, right? Most average car loans like 6 years. 7 years now, some are even 8 years for some people. Just, these cars are expensive, right? So when somebody wants to sit around and again say, well, I'm going to keep my car loan, and it's like, if you got a 7-year car loan, that's about the same average of a 30-year fixed mortgage, right? Because it's like, that's the average. People move, they do something or whatever, they sell the house, they refinance it, they have to pay off some other debts. So again, another one of those things where if you rolled it into the house, it's going to be cheaper money on you on cash flow basis. That's number 2. Number 3, if you want to do, just think if you had the opportunity, and if you've got all your bills paid and it's like you don't have any debt needs other than you just have your house payment, pulling some equity in your house. Can you imagine what it would have been like if you had bought 10 houses 10 years ago? How much more money would you have had? Now, I understand that most people's risk tolerance isn't there, but I'll just give you kind of just as an example of people that are out there that are commercial. If the interest rates were always so bad, then why do you see any crane projects or any construction projects around town, right? I mean, they're all over the place. Why is that? Because those people don't know what to do with the money. If they're borrowing at 8, 10%, 12%, it doesn't really matter to them, because it's like, hey, if they were able to go out and make 30 or 50 on their money or more, right? That's the difference. It's like they know what's going on. Got to work with someone that understands this stuff, so that way, they can become part of your financial partnership and having you understand this. And you can be, again, my contact number's on the at the end of the video. You're more than welcome to give me a call, and we always kick some ideas around. But a third reason why you maybe possibly should pull out some things is you might have an opportunity to get into some other investments that are out there with real estate, and you can take some of that equity out there, it's just sitting there, and have the opportunity to possibly, like I said, if you had owned 10 homes, back 20 years ago when I first came to the Orlando area, you could have bought a home, a brand new house for like $175,000. Well, anybody that knows in this area, just like everywhere else around America, the values went up, right? Just over that period of time, 20 years ago, that same house is now between $500,000 and $600,000. And here I go back and say, well, what if you had been able to had made that a rental, And I understand there's all kinds of people that just don't want to do this type of stuff, Personally, I'm not a big fan of the stock market, but that's me, because I don't think the average person benefits from it, if they don't have enough capital to make it work. But most people that have become successful or having most of their assets tied up 95% of the people that have a few bucks in their pocket have some real estate. So, it's one of those things where, the real estate market, over time has pretty much outperformed, what you would have kept your money just in the bank, just kept collecting it, as far as passbook savings type money. But there's other ways to do it. But I was just saying that if you have your investment capital that's sitting tied up in a house, just think if you had a few more houses and how much extra money, because it's not only your home that went up in value, everything went up in value on the block. So that's the third other reason why that you should possibly, refinance even in a high rate environment, because if you know what you're doing or you got somebody that does, you can work with them and try to find out which way to do it. We all would like to have, back 2 and 3% money, but all that did was allow more people to really just, buy more than maybe they could afford, and just raise the price of everything. So now we're into an environment in which I originally had gotten into the mortgage industry, and rates are, between these, in the 6s and 7s. I mean, so I've watched this wave, and I understand where people wanted to wait, but I'm just going to say, and we'll cap it at that, I'll keep the video short, but I'm just saying that when you're taking a look at your situation there at credit cards, I mean, you can drop your payment a lot less than what you're currently paying. And then one of the big benefits of when you do that and you have a bunch of trade lines, let's say you had 5 or 6 credit cards and you pay those off, because now you only have 1 loan versus 5, and it's like you're taking some FICO hits on your credit report for that. And it's just one of those situations where it becomes kind of a win-win, just depends on your financial situation. So again, here for you, Jeff Gruler here at SeaTrust Financial, and my team, be happy to, talk to you if anytime, just give us a call, and, we'll try to, financially come up with some kind of plan that helps you if you're in need of these things. Like I said, if you're totally out of debt and you don't owe any money on your house, whatever, good for you. But, for every one of you, there's lots of others not in that same shape. So again, thanks for joining me today, and I hope I added some value to this information of why you should refinance today. Thanks for joining me.